You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, that rockin' tune means it's time once again for the option block, a little program around here we like to use to break down what's trading in the world of options, give you a nice hefty dose, a hearty dose even, of unusual activity. Of course, a whole bunch of education/strategery, a bunch of your questions, and of course, peering into the future. We stir it all together, and we have the delicious and only slightly toxic potion that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the Options Insider Radio Network. You can get our stuff pretty much anywhere you find your favorite content, so iTunes, TuneIn, Stitcher, so on and so forth. Also via our website, we have a lot of great written content up there for you as well. If you don't do so already, make sure you follow us over there on the old social medias. So at Options on Twitter and StockTwits, we are the Options Insider on Facebook, and I believe we are Options-Insider on Mixlr. They just grab that link that we tweet out all the time and save us and follow us there. Or just search for Options Insider on Mixlr. You'll find us there as well. And however, you get access to our stuff, including via our mobile app, which is available for all of the major app stores. However you get access to our stuff, make sure you hit us up with your questions, your comments, your insights. We love to hear from you guys. And speaking of hearing from you guys, or maybe the other way around, you guys hearing from us, you guys can always do that every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr. Mixlr. That is indeed the platform that you guys can use to live stream all of our stuff. I think they were having some issues last Friday, but they seem to be up and running now, so we should be good. Hit us up over there or just grab the link whenever we tweet it out, and you can bookmark it and save it and follow us on the Mixlr service so you know whenever we go live. And then you, too, can join the fun, raucous crowd that follows us along every week there on the old show. Speaking of the raucous crowd, I'm joined by a raucous crowd of my very own. Starting off, let's go in order of proximity, starting off with the man holding down court over there in scenic, lovely St. Charles, Illinois. You know him, you love him, as Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program, sir.
Always happy to be here on this pre-election option block.
Yeah, we don't really get a chance to say that very often, do they? In fact, we've been doing the show for over 5 years, so pretty much only one other opportunity in the entirety of that run, at least from a presidential election perspective, of course. There are your local comptrollers and everything else, but they don't really tend to move the VIX as much as the old presidential soiree, and it is indeed that dance that is going on tomorrow. We'll get into that in a little bit, but first, let's also introduce my other cohort, my partner in crime, the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program, to you as well.
You know, you always got to go to St. Charles first.
Actually, I was
Is
just
it an Illinois thing?
I was
Is
just
it
thinking.
Illinois?
I was thinking he always goes to Maine first.
I was
thought it was an East Coast
I was just
thing.
thinking the other way.
I claim umbrage on you, East Coaster.
Total junk.
Umbrage.
Junk.
We need a listener. We need a listener to do the breakdowns. But yeah, I think actually quite recently I have been favoring Maine more. So I purposely went to St. Charles first this time just to make sure there was no umbrage. And instead, I got umbrage from everybody. So there we go. I guess that's a sign of a good compromise.
East Coast conspiracy. The East Coast crony network is what it is.
Exactly. The show's under protest already, and it's been only on for 2 minutes.
We've already got umbrage. So without further ado, let's just keep that umbrage train rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. Got quite a few things lighting it up, including the market itself, which is lightening it up, literally this case, to the upside. Rally ho mode up to over 2% out there. The S&P closing up about 2.25% or so, or over 45 handles on the day. The Dow up 2%. The laggard of the bunch, only 2%, a wee 2%. And of course, the Q's up about 2.5% there on the day. So of course, tech heavy Nasdaq rally ho. A lot of that seems to be on the heels of the FBI just stirring the pot yet again. They're stirring the pot about a little over a week ago now when they jumped in and said, yeah, we got this investigation that we're kicking off again, right in the teeth of vol view. So we appreciate that. It gave us some nice volatility to talk about. The VIX cash popped about 3 handles over the course of that show. So that was always fun. And now I guess today deciding that they've concluded their very brief investigation and the market's rallying on that news, which is kind of interesting. You know, in traditional elections in years past, it's kind of been the narrative of Republican rallies the market, Democrats tank the market, for lack of a better term, because of regulation and everything like that. In this case, that seems to be playing out the opposite side of that script, which is interesting. Also, maybe, again, coming back to that, the market like some sort of certainty. And it appears to be with the election in the rearview mirror for Ms. Clinton, does appear to be a little bit more certainty on that front. Again, we never know until the votes are counted. I remember a few years back with the whole Kerry Bush thing. The Kerry supporters were gloating in the morning. It seemed like the early returns were very heavily favoring their candidate, and lo and behold, they did not win. So sometimes we don't even know even after people come out of the polls for a while. Look at 2000, of course, the most infamous example of that. But that being said, let's turn our attention now. In order to avoid umbrage, I will go to Maine first, so no one gets mad. Mr. Rock Lobster, what was catching your eye in today's green on the screen rally palooza?
It is. I think we had this conversation last week. The market was pricing a 2% move, and look what it got. The election hasn't even happened, and it's up 2.25%.
Yeah, we posted a question this morning. We'll get to that a little bit. We're saying the market's pricing in about a 2% move through the election, and we already got that. So crazy cakes.
Yep. So unless there's a wild surprise, I mean, we were in the chat room, we're just trying to speculate on downside. We figured 2050 downside if Donald gets elected, because everybody would be flipping out. I don't even know. I think that might be just a one-time, I don't know, but it looks like we're kind of back to where we were before everybody worried about the election. So, I mean, there might be a little bit of rally left, but all the big rally seems to have happened today. And with it came, it's funny, the vol futures only moved a little bit. I mean, they're definitely down, but nothing compared to the VIX. They took a lot of heat out of this today. So, the algos are saying Hillary's winning, I guess. That's what I guess it is. Try not to be partisan, but that's what they're saying. As at least right now. And there we go. That's the main point of view. Although that could be wrong tomorrow.
Yeah, getting more streaming here. Indeed, all right. And Uncle Mike, what was firing off in your neck of the woods today? What was catching your eye in today's Rally Palooza?
Well, I'm going to put this into the things I don't understand section. With the emails originally, with the email news, I can understand with the initial announcement that came, the way with which it came out, how vol shot up. But in reality, I'm not convinced that the email announcement is what drove the market down over the course of the last week, because of the fact that I think that a lot of that was already priced in, especially when they said it didn't look like shortly thereafter, it did not look like Hillary was going to be investigated anyway. And then today, it doesn't come as a surprise that they said that they haven't come to any new conclusions since July, and then the market rallies as it does. Now I do understand the fact that the market seems to be wanting a Hillary win for the short term. I get that. But the other thing with which I don't understand for today is that if we have, if this is favorable news for Hillary, and I think it's just really no news because I don't know if it's really going to necessarily make much of a difference into what people felt anyway, but if this is such great news for Hillary today, then why is IBB rallying so much? Is all of a sudden the biotechs, are they happy that Hillary's going to win? Has she cut some deals with some new biotech cronies? Or that was the other thing with which I did not understand. So with all that I understand and that I don't understand, I don't understand what's going to happen tomorrow with the market. So what I'm doing at this stage is I'm very cash heavy in a lot of my positions. I would not be surprised at this point if Trump did pull off the upset of the century. But with that, the market seems to be thinking otherwise, but we'll see.
Correct me if I'm wrong. Weren't you the one saying last week that you didn't think we were going to know who the president was post-Tuesday? Was that you?
Possibly.
That yet another tinfoil hatter on my network. I forgot who it was who was saying that last week. Someone was that you? Was that you, Mr. Rock Lobster? Who was spouting off such nonsense?
I don't think it was. I'm not really a tinfoil hat guy. I think it looks like this is going to. It looks anyway like it's going to be much closer than anybody wanted it to be. Let's put it that way. How about I think that's fair to say. It'll be closer than most people wanted it to be, one way or the other.
I guess that's true. Everyone on either side and everyone who's disgusted in the middle, no one wants it to be this close, or perhaps not even these candidates. So a lot to, I think, unpack there. I'll have to dig back in and see who was saying that. They thought we were heading for yet another 2000 era tumult post-election. I don't know. I don't think that's really the case. We're certainly not pricing that in right now, but still, either way, we'll know for certain tomorrow. In the meantime, let's see what we can sink our teeth into today. There are indeed some earnings coming out, even though a lot of that has been overshadowed by the most macro of macro events, that is the election. And let's start here in the realm of all things hospitality with Marriott International, ticker symbol MAR, coming out here after the bell. They closed right around 71 and some change, up about $1.50 or over 2% on the day. I guess Uncle Mike Hillary fans like to stay in Marriott's. I don't know. Again, going back to your point from earlier, this is a name that did some pretty decent activity today. It's been averaging about 2,500 contracts a day, doing about a little over 9,000 today. But 1.5 to 1 puts over calls, which is kind of interesting given the rally that we saw out there. And they were pricing in about less than $3, about $2.75. That worked out to about 4%. And let's see if they've come out. Yeah, in the after hours so far, I don't know if the news has really been reported yet because they are effectively unched. So unless it's just the most resounding of mez, we shall see as in a little bit how that straddle unfolds as we move on to another big mover and shaker out there that I know a lot of you guys like to keep an eye on. That is good old Priceline. And they were pricing in, let's see. Well, they closed today about $14.80, and they were pricing in about $14.80. That's $1,480 for those of you out there who like to play the home game a little bit, and we're thinking maybe it wasn't. It was just $14.80. No, $1,480. They were up a whopping $56 already today, or about 4%. This is a name that does about 15,000 contracts a day, doing about 28,000 today, so nearly 2x, nearly 29,000 on the day there today. And they were pricing in, I think, about $82. So let's see what we're getting here in the after hours. Yeah, and they were pricing in, they moved $56 intraday. They were pricing in $82, which is a little over 5%. And so far in the after hours, they're up about till 15:31, so they're up about 3.5% in the after hours. So I guess if you add all that together intraday, they certainly equated their straddle. We'll see how this shapes up after hours. Priceline, always a big mover, a big name. Also, kind of infamously, one of the last of the big internet holdouts to still keep their stock extremely pricey, not going for that split, which I know is controversial for a lot of folks out there. That said, Mr. Rock Lobster, I'm sure Priceline was probably heating it up in the old pit chat today. What were people thinking out there in the land of the pit when it comes to Priceline?
You know, we had one of our clients has this kind of strategy that's sort of interesting. went on a Priceline, but that was really the only person that traded it. There might have been a couple of like way out of the money put spread sellers, but that was about it. The whole Priceline thing traded. We didn't have it's just the rest of the straight up rally and total crush and volatility kind of got everybody's attention for most of the day. They were kind of the scene stealers. So, and Priceline just happened here at the end of the day, so it actually didn't cross our radar screen until way late.
That's surprising. I figured you people would be slinging it out there. People are already chiming in on what we were saying with Hillary. Where we got Market Lion saying the old saw of the market makers. Market makers are to blame for everything. Saying market makers use any news they can to pump and skim. The market also hit key levels and relative strength. So there we go. It's the market makers' fault. They all love Hillary, and therefore the market is rallying today. I don't know. Do you take umbrage with that, Mr. Rock Lobster, as a former market maker?
As a former market maker, there's a little bit of umbrage to that. I don't know if they all love Hillary, but they like the status quo when it's going good. So, what are you going to do? Eventually, I guess eventually we'll have to pay all this money back, but doesn't look like today.
Yeah, I've tabled a lot of my former market maker umbrage a long time ago, but it does crack me up. We're still the scapegoats of all these things all these days later. Speaking of which, there was an interesting piece over there at the Journal today in their blogs. So people are asking us about this as well. Probably better to bring it up now than save it for vol views, because by Friday the election will be over. They were writing about a lot of people like to trade their VIX via a lot of different ETPs out there, your VXXs and your so forth, even unfortunately TVIX and a bunch of those other ones out there. And as we've seen before, those products have issues on a calm, gentle day, let alone a very potentially volatile day like the election itself, kind of an earnings report for the country, if you will. And now people are worried that these products are going to underperform. There's some talk from Deutsche Bank and others that some of these volatility funds have deeply boosted allocation to equities of about 70%, and saying when these markets get volatile, these equities pretty much they have what they call a feedback loop that could feed back and send the market into a tailspin post a big event like this. They're saying the days after Brexit, S&P dropping about over 5%, 5.3%, because, and at least according to this article, pinning a lot of that back on some of these volatility-centric funds that hold a lot of these ETPs and also have to unwind them into equities and things like that. A lot of interesting stuff. We were talking tinfoil hat-ish stuff before. Also, of course, a lot of these funds tend to focus on the very near term, the near portion of the volatility futures curve. The term structure, which, like you said before, is kind of the wild and woolly portion out there. And when you play in there all day, it's easy to get burned, literally and figuratively, and that's also perhaps a concern. I don't know, Mr. Rock Lobster, have you had a chance to look this over? Are you feeling this concern at all? Are you feeling that potentially the explosion, the myriad, the legion of VIX ETPs out there could lead us to perhaps some dangerous waters tomorrow, or is this yet another excuse for an outlet like the Journal to put VXX in one of their headlines?
Well, I think it's another excuse. VXX, it wanes in and out trading. The VIX futures are, the liquidity on those things are, what are they, like 25 or 40,000 contracts a day on the two liquid strikes? And you know what? And ultimately, I don't know what Wall Street is writing upstairs as far as volatility products go, but, so you got 144,000 November contracts and 124,000 D's contracts today in VIX. And ultimately, most all of the vol products that get listed fail. We've kind of giggled about some of them. Remember about the up, vol down, and all these just insane products.
That's a rollicking success. I will hear no dispersions against them, sir.
So, like I said, VXX reliably crappy, UVXY reliably crappy. We look at SVXY and we look at XIV are really the only things that we look at to trade, because they have kind of a flow with, how the fund buys futures. And they are reliable in the fact that they do what they do, and they're and volatility is not a long-term investment. I know it's going to be a shock to people. This is a shock. Apple could be a long-term investment. Google could be a long-term investment. Volatility is not a long-term investment. It's one of the things we stressed in our Saturday class this Saturday, which went very well, I thought. The trade we set up there was very prescient for today. We thought this was going to happen Wednesday, not today, but heck, early is fine with me. They're very short-term products, and you got to understand how they work, but they mostly do what they're supposed to do, and the volatility futures do certain things. And then once you understand that, then they're predictable in the fact of how they perform. You never know what volatility is going to do from one day to the next, or you're a special person. But at least if certain things happen, you'll know how the vol products will perform. So there will not be a demise. It's almost like, and I know, now figure this out. Has the market gone to zero since they introduced the E-mini? No. They have not shorted it out of existence. And I think, it's like anything, these products have been around now for a while, about 10 years. And people just aren't as dumb as they used to be with them, although somehow they can still market and sell really bad vol products to people. These tend to hold on. So I have to say I fade the whole notion of, as long as the futures are liquid, the products, they'll kind of keep doing their thing. So that's that would be my opinion on that. The Mr. Grumpy Pants in the Wall Street Journal, basically.
Mr. Grumpy Pants. I don't know, sir. You were close to the ban button after casting such aspersions at all things VIX up, VIX down. But you'll be forgiven, at least for this time. We'll keep an eye on you, though. The ban button is ready as we keep on rolling into the darker, the shadier, the much more dubious side of the options fence. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the dubious side of the show. It's time for Andrew and I, and Uncle Mike, if he's feeling up for it, feeling dangerous and adventurous, to don our fedoras and our trench coats and go where few, indeed not many at all, are foolish enough to tread before us. Indeed, it is the Odd Block. Let's kick things off here with, let's go with KBE. This is the SPDR KBW Bank ETF, if you're not familiar with it. Again, ticker symbol KBE, closing a little bit over $35, $35.09 to be precise, up exactly $1 on the day, or nearly 3%. This is the name that does about 2,400 contracts a day, doing about 13,000 and change today. Pretty outsized on the call side, about nearly 64-1 calls over puts, 13,206 of that 13,423 coming on the call side, only a whopping 207 puts, lighting it up out here today. If you want to find what we saw out here today, listeners, you got to scroll a little bit, scroll past the Nove and the Dees, even the Jan, all the way out to March of 2017, where we saw the March 35 calls lighting it up to the tune of just a handful under 10,000 in that first block that we saw, 99.86 to be precise, going up, paper blasting out a block for $1.60 over there on the Philly. As the day went on, about another 1,000 and change, went up a total of 11,005 on that strike on open interest of just 27 contracts. So clearly opening paper. Looks like someone's sitting on some stock and perhaps decided today to blast away on these at-the-money calls. We don't see at-the-money rights very often. Of course, maybe when they initiated this trade or started thinking about it, the stock was a buck lower. So these were indeed out of the money calls. Now, of course, whopping at the money calls again. He wants this thing to he thinks he's clipping his upside at that old 3660 level. Let's look back here on the year that was here in good old KBE. If this was indeed a stockholder, we didn't see any stock going up with it, so it has all the flavor, the feel of an overwrite. This is the name that has been vacillating around a little bit. It was at these levels, actually higher, back in the November-December timeframe back in 2015, trading around the 36 handle, flirting with 37. And then the beginning of the year happened, and we know what happened to most of the names in the January-February timeframe. They got shellacked, to use the technical term, and this name was no exception, getting down to about the 26 range or so before beginning its long, slow slog back to the upside, not without some hiccups. It sold off again back down to 28 back in June. So this thing has not always been on a straight upward course, but for the last few months it has, evening out right now at that 35 handle. So Mr. Rock Lobster, an interesting one to kick us off. Our friend here, obviously sitting on some gains if he's been holding it for a while, and not uncomfortable with dumping it at 36.60, or indeed taking some of that yield off the table. What's your take here on these pretty sizable calls here in KBE?
I mean, it's 5% though, right? It's almost 5%, maybe 5%, something like that. Close. No cigar, but close. So I'm thinking, okay. I mean, it doesn't look bad. And when vol is up here, you got, if somebody that depends on a call right, you got to sell them when they rally. So I think it is it's not a bad looking right for the time frame. 5% for 1 quarter, actually it's about half a year, but with the divvy, I could see how that could work. That's not terrible after the rally we had.
Yes, worth noting, of course, like a lot of these spider names, there is a dividend out here, so factor that into your equation when you're writing these calls, and also when you're buying and holding this thing. Something to bear in mind. It is still amazing. You probably get this still, Rock Lobster, over there in the chat room. How many times do you get people approaching you guys in your chat, probably new clients or mentees, who are mystified at the whole SPY dividend thing? Is that pretty much every quarter? Because we still get it every quarter. I thought this was kind of old news by now, but people are still mystified by this.
I think that it surprises people when they get assigned their calls.
That's what I mean. I'm sure they come to your chat room like, wait a minute.
Assignment is mathematical. We try to keep people from – the whole reason we have our chat room is so people can always ask us questions. It's you put a question in, you get an answer. I can't say I can answer every option-related question, but I can answer a lot of them. So it does come, but, it doesn't happen as less, although every once in a while we get a newbie that might get stung. The biggest problem is when you have a trade on and then you have a big move and all of a sudden a short leg's in the money on a fly or something like that. And then you're like, oh, well, wait a minute. Like, it's okay. Assignment is okay because your risk doesn't change.
Sometimes they assign you at some nice and attractive levels, in which case that's a nice thing. But yeah, I don't usually, I kind of use it as a nice calendar reminder, a quarterly calendar reminder. I have to check my calendar to see what date it is when I start seeing those emails hitting the Options Insider account. I know, okay, it's SPY dividend time. It's just like clockwork. Why did my calls get assigned in SPY? Well, that 99.9% of the time, that is indeed the answer. I'll save you some emails at the next quarterly dividend. Just look into that. All right, let's move on to... what do we got here? Oh, we're moving all over the globe here from good old KBE. We're moving on up, or perhaps down, depending on your point of view. Certainly from a price perspective, it's a little bit higher. This is EWW. This is the iShares MSCI Mexico ETF. This is a fun one. A ticker symbol, like I said, EWW. Excuse me. Closing today, $51.88. Up $2.53, or about 5% on the day. It's the name that does a pretty decent volume for an odd block hand today, about 15,000 contracts a day, a little more than that. Today doing well more than that, doing 85,000 contracts. So pretty even, nearly one-to-one puts over calls, and that's partly because the size trade out here involved both. It was indeed a bit of, as the Rock Lobster likes to call it, combo. But to me, that's old school. To me, a combo had to be same strike. That's more of a risk reversal to me. But we've had this debate many times. I won't throw him under the bus yet again. He's already in trouble for besmirching all things VIX up, VIX down. So we move on. It was the Nove 45-48 put spread going up. When we started looking at this, about 6,000 times as the day went on, I should say, it went up a total of about 7,000, so about 1,000 more piling in after the fact. And that went up against the Nove 55, the Nove double calls. That was going up also about 6,000 and some change. It's kind of a bit of a funky one, so bear with us. It went up in 3 blocks over there on the old ARCA, so a bunch of different chunks going up, adding up net to about 7,000 or some change, or a little bit of a ratio on the different legs. Could be some profit taking out here in EWW. Looks like a paper coming in to buy back a short put spread, so buying the 48 puts, selling the 45 puts, and then also dumping out that 55 call. So they had a bullish risk reversal on, or a bullish put spread with a call kicker, call it what you will, and they decided, again, maybe with today's pop, you know what, it's looking pretty good. We set it up for Nove, so there's not much time left on this. We're going to take it off here after the fact and after this nice pop. Again, open interest is pretty sizable on all of these strikes. 48s has about 11,000. The 45s have about 21,000, and the double calls 13,000. So a lot of open interest out there on all these strikes. Again, reinforcing our theory that this is indeed closing. And then looking back at certainly the last few weeks out here, this thing has been on a bit of a rally. It's up about 3 handles or so. Longer term, going back to mid-September, it's up about 6 or so handles. And of course, since then, it has pretty much been vacillating over the better part of the last 6 months, kind of flirting with the mid-50 handles and then selling off again, getting down as low as 45 several times over the last few months, and then rallying back to 54. So this thing has been kind of range bound for the better part of the last 6 months. And our friend here may be deciding today's up move is near the upside of the range. They want to take it off, get while the getting is good. Senior Rock Lobster, what's your take on this one? You think they are indeed closing out what was previously a nice bullish risk reversal / combo to you old schoolers?
Yes, combo to us old schoolers. This EWW, this Mexico ETF, this has been one of the more volatile traders. Talk about, and I know Mike was confused, like, well, biotechs are up. I just think it got swept up in the kind of the buying frenzy of everything. But the EWW, it had a pretty big move. And this was, I think, because there was a big fear that, Donald Trump would get elected and crater the Mexican economy somehow and tear up NAFTA and throw it at everybody's face. But, this is up. It was up 5% today, vol down a ton. And to me, it just felt like somebody was a savvy trader when everything got real ugly. They sold the put spread near the money, bought some calls in the combo. They got a fat move and they just took the money. It looks like they took about half of what they might have had off. So it looks like that kind of a trade to me, I have to say. So I'm thinking that this was a close. But it's it's kind of a standard. Okay, I'm going to sell some put spreads, take that put spread money and buy some calls. They probably got a nice credit for it, and they probably unwound it for, it looks like a pretty decent credit as well. So it looks like they won 6,000 times. Yeah,
a happy camper here on the old odd block. Can't always say those, let alone done so quickly. So our friend here, getting while the getting's good. You can't mock him for that. Instead, we'll keep on rolling into a frequent offender here on the old odd block to round out the segment for today. Got to go back. Got to have something energy or petroleum related here. It just doesn't feel like an odd block then otherwise, at least for the last 6 months. These energy and petroleum names have just been dominating so much of the headlines, of the narrative, of the back and forth, and going back here once again to Marathon Oil, our old friend MRO, closing today $14.15, up about half a buck or a little over 3, about 3.5% on the day. It's the name that does about 17,000 contracts, so pretty decent volume for an odd block candidate, doing about 27,000, nearly 28,000 on the day, about 2-to-1 puts over calls. And this is the name that, yes, it does pretty decent paper. And what we found today was kind of interesting. And again, the put heavy nature of that came from the spread that caught our eye. It looks like a potential roll out here from the old, instead of the old up and out, it was the old out and down. In particular, it was the NOV 14, so regular NOV, no weekly there. NOV 14 puts against the DEES 13 puts, again, regular old monthly DEES, no weeklies to speak of there. Doing it, it went up, I should say, about 6,000 times total. We caught our eyes pretty much two large blocks, I should say, over there on the Philly, going up a total of 6,000 times. Looks like paper buying the NOV, so closing out the NOV for 53 cents and then turning around and selling it out on the DEES for 51 cents. Now, again, this is what I was alluding to earlier with some weird ones today. This is one of the weirder ones because it went up 2 blocks. Normally, you can nuance this stuff by looking at where it went up on the bid-ask spread and a few others, but both of them pretty much lifting the offers are very close to it. It's not the type of execution we usually see, so it could be a couple different scenarios. If it is indeed a close, could be the customer really, really paying up to get out of that NOV. They wanted to get out, they wanted to get done today, and they were willing to pay up a little bit to do it. And then maybe their facilitator on the other end getting them a little bit better price, a little bit more favorable price on the DEES to make that pain a little bit less there for them. Or it could be bad execution. It could be a bunch of different things. It could be depending on really how you look at it. There's a lot of different ways. But it does have the fever, again, or its flavor, I should say. Or a fever. I could have a fever right now as well. But it has the flavor of a close, even though the initial prints don't seem to really support that. Again, why you kind of got to do your homework on this stuff and dig in a little bit beneath the surface. Looking back at the year that's been out there in Marathon, it's kind of followed the predictable trajectory of a lot of the oil names hitting their trough back in the February timeframe around the $6 handle, and since then having rallied substantially over 2x, again closing at $14.15 today. So an interesting one, maybe taking advantage of a little bit of a pop to roll this bad boy today out and down. Mr. Rock Lobster, how do you fall on this bit of a head scratcher here? Do you think you think it's closing, and B, do you think, even though they're kind of lifting offers on both, that they were indeed buying one and selling the other? Or is this some sort of funky Tusaw-esque time stupid? What are you thinking on this?
I thought it might be a stupid
umbrage.
There he is. I was just trying to wake him up. Didn't want him dozing off before the mail block.
You got him to pop. You got him to pop out of his nest. His nest in St. Charles. It just feels like, oil got smacked. That probably somebody got a little surprised. They're going to close their NOV 14. They're not going to take any chances and roll to the DEES 13. It looked like kind of a vanilla roll to me, even though the pricing was kind of it traded higher on the offer. But I still think that's kind of what it looks like. Just kind of a vanilla roll. You had a nice little rally today. You don't have to get hosed on the 14 puts you're short. You roll to the 13s. You're happy, and on you go. It's about the same credit, and you try to make the money next month. That's the feeling of this type of trade. So, but I think there still feels a little bullish to me too. Actually, strangely.
There's a lot of strange things about this trade. We'll maybe have some time to analyze this one. We'll flag this one, and we'll put a little asterisk next to this one. This will be in our to be watched category. As we keep an eye on this one, maybe we parse the open interest tomorrow, see how that unfolds. As we keep on rolling, it's Monday. It means it's time for you guys to take the reins with the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys get to hit us up, take us in all sorts of weird and wild and sometimes wonderful, sometimes head-scratching directions. You can do that, no shortage of ways. A lot of you guys like to hit us up via email and have done so, of course, via the website feedback form. You can do that as well. Also, via the mobile app, most of that stuff is baked in. Or if you want to hit us up on social media, at Options on Twitter and StockTwits, just use the tag Option Block, and we'll find it. Or again, if you're joining us live via the Mixler as well, you can hit us up there as well. We'll pay off some of these questions we've had floating around for you guys over the last week or so. First off, we asked you guys last week. You guys are so savvy, so prescient. We asked you guys last Monday for our question of the week. We said, hey, what do you think is going to happen first? Is the VIX going to, it was a special kind of World Series and everything else, election edition. What's going to happen? VIX going to pop over 20 before the election. Facebook going to beat the ATM Straddle. Donald Trump win the World Series. That'd be interesting. Donald Trump win the election, or the Cubs win the World Series. And you guys knocked out of the park. Even though us here on the panel, took a little bit of a dim view on VIX popping over 20. Sure enough, it did, and did so very aggressively. And 40% of you guys chose that last week. So well done. Well done indeed. As we move on to today's, this week's, I should say, question of the week, which should be pinned on our Twitter, but is not. So I'll make sure that happens. Meanwhile, let's get into it. Our question of the week this week was as following. We said, looking at the kind of touched on this on the top of the show here, but the SPX was pricing in a 2% move through the election. Again, thanks to those nice Wednesday weeklies over there at the SIBO now, gives us a little bit more nuance. Don't have to get a full week worth of straddle. Now you can get it right in through Wednesday, which is perfect because it's the day after the election for us. How much will SPX or SPY move through Wednesday, November 9th? So again, we put this up about an hour or so before showtime. So a lot of that move had already happened. So we're going to look at it as beyond, not just today's move, but tomorrow. Think of it as tomorrow and indeed Wednesday. What's going to happen through the election and again post-election. Today, kind of off the table, let's just say that. So we gave you the choices of over 3%, so a crazy move. Between 2 and 3%, which would be a big move. Between 1 and 2% would be kind of a mild move, or less than 1%, which we termed the meh, the resounding meh of the panel. And while I try to find today's answers, let's start with you, Mr. Rock Lobster. What do you think is your choice, and what do you think is winning our poll?
What do I think winning our poll is probably going to be between 1 and 2%, and that's kind of where I am now after this move. I think it would be a surprise. I mean, how much more rally do we have, really? And two, we already had kind of a big move, so I think a surprise could easily get us down 2%. So I'm in kind of the mild move camp. I was in the big move camp before, but we already kind of had it. So what the heck? When you already have it, how big of a move can you have once you've already had a big move?
Yeah, that's what you got. Today's move does put it in a little bit of different perspective. Uncle Mike, what are you feeling, and what do you think is winning our poll so far?
I'm going to go with mild move as well for both my feeling and for the poll. And I agree. I mean, it's with what's happened. Yes, today was kind of a big move, but a lot of it was just getting back what we lost over the course of the last 8 days. So I'm going to go with a mild move, and I think our listeners will as well.
Our listeners, at least so far, it's only been an hour. It's only been up about an hour. Obviously, it only goes through Wednesday, so it's called a question of the week. But get your votes in soon, because you can't really vote on Friday on this. Doesn't really make sense. So a lot of votes pouring in already in the first hour, and so far, at least, our listeners kind of evenly split. By the way, today's move does kind of put it into a bit of a perspective. I would probably would have gone bigger, but again, today's move squeezing. Even though we're not supposed to look at that for the questions of this poll, it's kind of hard not to look at previous movements. So I'm going to unfortunately go on that 1 or 2% move as well. I hate to agree with these two, but say la vie, sometimes you kind of have to. Overall, about 37% winning right now, with over 3% leaning towards the crazy move camp, then a literal tie between 2 and 3% move and the mild move 1 and 2%. Only a comparatively anemic 3% choosing the meh. So people thinking we're going to go somewhere, if not here. Let's kick things off. What do we got here? We got one actually came in on the chat on Thursday's show. We didn't get a chance we didn't get a chance to talk about it, so I wanted to squeeze him in today. He was asking about, well, I'll read it off for you. We got a question from RKintz. He says, what do you guys think of out-of-the-money puts on PBR? This is Petróleo Brasileiro SA Petrobras. Surprise, surprise. That's an ADR. Let's see. Notice heavy buying across several expiries over the past few weeks. He puts in parentheses, possible speculation of a prolonged glut in oil supply. Well, let's pull it up and let's see for ourselves here. Again, ticker symbol PBR. Let's float on past the weeklies. Get into, there's also at Petrobras, or PBR I should say, closing today, $11.40, up about 3/4 of a point, so about 7%. So strong rally out there today. So a little bit different scenario than it was last week. But he is right. There are about nearly 19,000 or so of the November 9 puts open right now, and also nearer, right on at the money, given where it was trading late last week, earlier today, 20,000 of the Nov 10 puts, going a little bit beyond this. Let's see out here to Dees. Dees looks pretty mild, and regular Dees also. I mean, there's some open interest, 4,000 on the 8 puts, but that could be legacy stuff from a few months back. So, and again, also way out here back in the Jan time frame, there is some size open interest here. 3 halves, 4s, 4 halves, and 5s, all having, well, except for the 4 halves, having close to 100,000 contracts open there, which is somewhat interesting. This name was flirting around at those levels not that long ago. Again, back in the nadir of all things petroleum and energy and the market. Back in Jan, Feb, this thing was flirting around the 3 handle. So a lot of that could be legacy positioning from that time frame, which they tend to trade in these big kind of quarterlies and annuals contracts like Jan. So that wouldn't surprise me there. Again, I haven't had a chance to parse the initial recent paper. I don't know, Mr. Rocklops, you like to watch a lot of these energy names. Have you noticed? I mean, there is open interest here. Have you noticed any paper going up recently to concur with what our friend RKintz is speculating? He says it's heavy buying across several expiries in the last few weeks. And do you concur that it is indeed speculation of prolonged glut in oil supply, sir?
I don't know about the prolonged glut. Because PBR was, I think, would have traded down to $3 this year.
Yeah, hit about the 3 level.
Thinking that somebody might be wanting to lock in some end of the year gains.
Very
somehow,
low for Pabst Blue Ribbon.
Yeah, I think they want to just put buying, lock in some gains, and not mess around too much. That's what it feels like, I have to say. But I thought it was an interesting trade when it was $3 or $4, but of course I dumped it too early. So, and then it ends up, tripling. So, yeah, are you going?
I knew this is one of your favorites here. That's why I tossed it to you, Uncle Mike. I know you like watching the oil names, I should say. You like USO more than some of your ADRs. But that said, what are your thoughts on PBR and our listeners' speculation that the open interest is tied to people specking on a longer-term glut in oil?
Whoa, first off, mine are umbrage, XLE, not USO.
Oh, that's right. I'm sorry. You're right. The 30 puts in XLE, not USO. I'm foolishly have forgotten that. I figured
it was a slip of the tongue. That's why I just gave mine umbrage.
I accept your umbrage, sir.
God. Okay. Wow. I've never heard you accept umbrage, but anyway. Okay. So PBR, besides the fact that it was voted the America's best beer back in 1893 or whatever it says on the can of PBR, with the stock itself, yeah, I think that this is one where I could see it coming down a little bit. Just because it's had such a huge run over the course of the last few months. And I would tend to agree this would be something to more of a protective play, and that, but they are pretty far below, but it's one where I think it's kind of like a wildly protective play, if anything. But in terms of what it actually has seen, what the actual numbers are, then I have not had a chance to parse that either.
Yeah, and the longer term stuff out in the January, I think is probably longer term positioning type stuff. And in the near term, again, it could indeed be the positioning here. I'm being handed notices in the studio, listeners. As we move on, let's see what we got here. Oh yeah, Real RK also in the chat. Chat lighting it up today with some good questions. Everyone's got puts on the brain today. Must be this rally or perhaps the election. Everyone's thinking downside coming to burn. Real RK wants to know, what do you guys think of being long a little less than 1 standard deviation puts out of the money for January on everyone's favorite hyperbolic name, Tesla? He says the implied vol rank is low historically, and vol now through January could get crazy in my opinion. Well, being long premium in Tesla is always interesting to boot. Tesla, of course, closing today south of that that mythical, magical 200 level, up about 265 though, $2.65 or about 1.5%, closing right around 193. And some change. This thing has kind of been vacillating around a little bit off the weight of some recent news out there. And let's pull it up and let's see if he says, let's see, January puts is what he's looking at. And for some reason, my scroll wheel's not playing ball with me today. Here we go. That makes it a little bit easier. So we're talking down in that probably 160 to 175 region. And you're talking about $5 for the 170 puts, a little over about 6.5 for the 175 puts, listeners. Going down a little bit farther, if you want to go maybe a little bit lighter, 160, you're talking about $3.50. So a fairly, even though he says those are historical low levels, again, everything's relative when it comes to volatility. And even relatively low levels, I'm looking here at the, let's see, these are the 160s. And he's right, they are at least on the lower end of the recent trough. That's about a 44 implied vol. They have hit a little bit lower, about 43, but as of they were trading or printing up in like the 48 range not that long ago. So it has trended down over the past few months out here. So those puts are relatively light. That still is a pretty hefty boat. You need to really to make that pay off. If you're going to go that route, I'd be more comfortable. I won't put words in Uncle Mike's or Rock Lobster's mouths, but I have a feeling they're going to agree. That'd be more comfortable if you had some other short leg against it, if you're going to leg into a vertical. So now you're doing maybe 160, 150. Now your outlay is going to be $1.50 and around. You can sell those 150 puts for about $210, $220. So now you're talking you're only out about $1.40 or so, which is a lot more palatable against Tesla, and then you can always do something else against that if you were, I don't know, I wouldn't caution the upside legs. Maybe we'll just leave it there. But there are some other names that are probably less prone to explode to the upside, maybe an upside call strike. If you did indeed have some stock, you could indeed turn around and write, let's say, the 220, 230 strike, and now instead of having a debit, you can actually do that for a credit. And as long as you're happy with getting rid of your stock at those levels, then it could be an interesting play. You could also do the 1x2 to the downside. Again, get a little dicey here, but if you are attractive with those levels of the 150 level, buying some Tesla, that would kind of be a key component to the risk management of that. Then you could indeed use this as a stealth way to get in to some Tesla, and now indeed you're getting a credit for that rather than a debit, excuse me. Again, I'm always leery of naked legs in a name like Tesla, naked short legs. So that's why I'd be happier if you can write the call to have some underlying. Maybe you use this as kind of a funky way to get into a wheel trade, then you wheel out with the call. Let's start on the other way. Let's go, Mr. Uncle Mike. I know you don't like to sling a lot of Tesla. It's not really your thing, a little bit too high flying for the strategic night portfolio. But what do you think about the initial premise, buying one standard deviation out of the money puts just straight up in Tesla? And then what else would you counsel, or would you counsel against that?
Well, a lot of times I come to the conclusion that a put spread, if you're bearish on something, or just looking to hedge, if you're looking for if all you need is a limited hedge, I often believe that a vertical put spread is the greatest thing since sliced bread. And I don't know if I can quite give it the sliced bread category for this one because I haven't analyzed it enough, but I do initially agree with you, Mark, in that I think that using a put spread would be much more easier for me to stomach anyway than just straight up buying puts. So I like that idea. If you do own some stock in this and you want to hedge it for the near term, there's often times that I'll have stocks that I'm holding for the long term and just as a near term hedge, buy a put spread on. And by doing that, it's one where if the stock does take a little bit of a pullback, you have some money. And no one ever complains about extra money. It's a shocking thing with which I'm finding throughout human psychology. The other benefit of that is that you have typically the natural inverse skew that exists in equities, meaning that volatility is typically higher in lower strike puts. So that way, buying a vertical put spread is oftentimes pretty beneficial from a pricing standpoint. So I really like it. I think it's a great way to play the downside. And if you want to find a way to, if that's even too expensive for you, there are ways to get your juice for free. But I'm going to put Andrew in the hot seat and talk about getting his juice for free, because pretty much in all questions like this, he comes up with a very interesting and creative way to get your juice for free.
Juice for free.
Have you started working on that book yet? The Juice for Free book?
Juice for free. I know. I started outlining some chapters, but it's going to be. I don't know if I could just do juice for free, but I might. I might just call it that just to see what the heck happens.
I imagine your kids don't do well on their lemonade stands out there in Maine because they give it all away for free.
No, that would be the opposite of what you need to do. You want it for free, but you have to.
Well,
get
that's what they do.
It.
They get their juice for free so they can sell it.
They go and raid other lemonade stands and steal the juice, and then they in turn dispense it to the others. Kind of like a Robin Hood thing for lemonade.
No, they have some type of lemonade arbitrage going in Maine. I'm convinced of that. That's what it is.
I know my kids started a business selling, all the old firewood that's laying around over here. So it was his first successful venture, I should say. Not bad for 13, but anyway. So as far as Tesla, my biggest problem with Tesla is Elon Musk. He has a very annoying habit of saying stuff, and the stock rallies $10. So anything really like that where you want to short it, everybody's been wanting to short it for a long time, and it just doesn't quite go down, although it has been lagging of date. And yes, and the volatility is cheap. So, and I think Mike did cover this some. I mean, I think time spreads are certainly reasonable. Put time spreads out of the money. You could even use like double calendars every once in a while. It has such just tendency to shock. So it's hard. That's an actual one where it's relatively hard to the juice for free. What I have done that has worked sometimes is you try to buy some call time spreads. You're going to get theoretical decay from the call time spread if your vol is low enough. And you can afford to buy usually a put or two. Usually the ratio might be 5-to-1. So you do 5-to-1 call spreads, one put. You can just sometimes squeak it out where you can get that call spread to pay for the put premium. And if you get the annoying Tesla rally, you actually can make some money. So you can try to structure things like that. It's just, unless you're kind of hit the nail on the head, you end up sort of eating that decay. So I kind of call that trade a slider. It does work if the vol is low enough. You have to buy really low vol. Generally, you can't do duration for more than 3 weeks. But that would be my juice for free idea. And with Tesla, that structure works fairly well once the vol gets low enough, because there's always enough juice in the near term usually that you could help finance a little bit of action. So that is how I would set that.
Yeah, it's always scary to have any sort of even on a time spread like that. That naked leg is always, or that other leg, not naked in the time spread, but that that exposed, shall we say, leg is always enough to give you, particularly in the near term, all that short gamma, enough to give you pause in a name like Tesla, which is why I think all of us are a little bit hesitant to dive back out. A lot of good questions. Mike the Bookie, we'll get to your thing about bracketing UVXY on an upcoming show. We're already running long. Got to keep on rolling right on into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we give you a hint of what we're watching for the rest of this week into the weekend. You guys really bringing on the questions today on the Twitter as well. Didn't have a chance to even get to one of the ones people sent in. That's what happens. Live people trump you. So if you send them in ahead of time, we love you too. But if you're live, we tend to favor those sometimes. All right, and let's check in really quickly here with, looks like my quotes are off for Priceline because it's saying it's unched in the after hours, which I do not think is correct because it was rocking and rolling earlier. Let's see if I can get it going back here really quickly as we check in on Marriott. Let's see, it was pricing in really quickly here, pricing at about $275, and again, I think most of my my quotes are down. So here we go. Priceline in the after hours up $80 and 67 cents, about 5.5%. So pretty much exactly what they were pricing in. They're pricing at about $82. So funny how that works. And let's get a really quick check here on Marriott, which in my screens it is not compliant. So maybe Uncle Mike, we'll start with you. What are you watching for the rest of this week? Obviously the election tomorrow. And if you happen to have an after hours quote on Marriott you want to throw it our way too, I wouldn't hold it against you, sir.
Oh, well, no, I'm not quoting anything on Marriott at this point. So I'll leave that on up to Andrew if he has a quote on that at that point. But in terms of the election, I think I don't see what else you could possibly be watching tomorrow. Tomorrow throughout the day, I'll just be watching the news, seeing the speculation on why one person is winning, why one person's not winning, why they what the exit polls are saying, why they're not releasing exit polls, the election controversy, whatever the case may be. But yeah, I don't see how you can possibly get anything besides what's going on with the election at this point, just with everything that's happening. So with that, that's all I got for right now. And in terms of Marriott, okay, I will look it up real quick. I'm showing 69.12 by 70.
Well, there you go. So selling off a wee bit. Yeah, these quotes are all kinds of funky over here. It's showing me unched. So we'll just move on from that. We also have some other names coming out this week. We got Valiant, good old Myland, Shake Shack, and Macy's. Thursday, we got Disney and NVIDIA and Nordstrom. Friday, JCPenney if you're out there. And the retailers, take it away. Mr. Rock Lobster, what are you watching for us this week, sir?
Just the election. Election where Vol can go, and what and it's the end of an era. It's the end of the Obama stock market, and by all, he came in, it was in the 600s, and he's leaving in the SPX is 2131. So say whatever you want, but he was good for stocks under his administration, and now it's time to set up for the next one. So I guess the big question is, who do we get? Who do we get?
It kind of helps when you have a massive implosion in the market right before you take office, so it wipes everything out. So you get to start not quite from scratch, but pretty darn low. That always helps your numbers, at least from a market perspective. All right, that music means we're done. We're overtime. We're out of here for the option block. But before we go, really quickly check back in with my cohorts, my partners in crime. Rock Lobster, we'll start with you. You guys had a successful volatility webinar, sounds like this weekend. Where can listeners go if they want to find perhaps a recording of that, as well as what else you guys got planned over there in the land of the pit?
We have a boot camp coming up if you want to learn how to trade volatility, Greek-based trading. Come to Option Pit /events. It will be posted soon, or send me a note at andrew@optionpit.com if you want to do some learning. If you would like our volatility at primer and ETP primer, again, send me a note at andrew@optionpit.com. You got to pay for it. Nothing is free except for our free webinars, but that's not one of them.
Nothing is free except for our free webinars. I like that. Good marketing spiel from you. Head on over to optionpit.com to learn more, listeners. And Uncle Mike, what is cooking in the land of all things RCM alts?
Well, I challenge you to take the commission challenge. Contact me if you would like to trade through our TD Ameritrade umbrella through the RCM umbrella through TD Ameritrade, and see if the commission structure works better for you. Feel free to contact me at 312-212-3531 or shoot me an email at mtusa@rcmfs.com.
All right, everybody, that's it for us. On behalf of Uncle Mike and the Rock Lobster, who's already gone, heading out to crab fishing or lobster catching, whatever the heck it is, stealing lemonade, whatever else they do out there, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course for sending us such great and many and varied questions. Keep those coming, and we'll see you next time right here on the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.